Welcome on board of Welcome on board of the September edition of the CSEE News broadcast by PropTech Bulgaria. This is the right place and time to get to the latest trends in construction and real estate in at least 6 of the countries of the Central and Southeast Europe: Bulgaria, Poland, Hungary, Romania, Czechia and Slovakia. Today we will talk particularly about Poland, and we start with the commercial real estate asset class. In the first 6 months of 2022, investment volume in commercial real estate in Poland reached 2.9 billion euro, recording the third best result for H1 in the last 6 years. The Polish investment market, despite the geopolitical turmoil, is doing well. It's noteworthy that it is the office sector leading now in terms of investment volume. Its result of almost 1.3 billion euro translates to 44% share in the total investment volume in H1 2022. Investors' activity in the office sector increased by 60% compared to last year, notes Marcin Pergel, Senior Director Investment at Avison Young. One of the office sector's best results in history was strongly influenced by the acquisition of the Warsaw hub by Google, the largest single transaction recorded so far in the office sector in Poland. And it was thanks to this transaction that the office segment took the prime position of the warehouse segment, which have dominated for the last 2 years in investment transactions. Take-up was also powered by the improving rental market and the build-up of transactions closed by large tenants from the financial services sector in the first quarter of the year. As the pandemic began to ease, some tenants who previously were hesitant went ahead with their office deals. This is confirmed by 392 transactions finalized in the first half of 2022, representing a year-over-year increase of close to 58%. Renewals and new leases accounted for 48% and 45% of the total take-up, respectively, followed by expansions, which made up the remaining 7%. A development obstacle for the sector is the lack of plots in central locations. In addition, the cost of obtaining money to finance projects has increased, and investors have difficulty estimating the level of future inflation and increases in material and labor costs. Already in the pandemic, developers were afraid to invest and many projects were suspended. Also, few building permits have been issued. Taking into account these factors, the number of initiated investments and the volume of demand, an office deficit should be expected in the years 2023 up to 2025. Therefore, due to the supply shortage, demand is greater than the supply. In recent years, we have become accustomed to steadily increasing developer activity with an average of 700,000 to 800,000 square meters of office space under construction. Today, there is only 260,000 square meters under construction, which is the lowest figure since 2010. JLL's experts have concluded that the situation is influenced by a number of factors, including low land availability and high development costs, developers adopting a more cautious strategy, and competition for plots from the PRS sector. As a result, a shortfall in new supply for the office property sector is expected in 2023. In the first half of 2022, 8 office buildings were completed in the Warsaw market with a total area of 129,000 square meters, of which with as much as 85% being leased. The largest developments to come onto the market included Forest Tower, property of HB Reeves, and the 2 Sky Sava buildings. Office space in the best properties is systematically decreasing. An increase in headline rental rates is already visible, especially in those locations where the offer is very small and the demand among tenants is high. So far, the increase in asking prices is minor, between 0.25 up to 0.75 euro, says Mateusz Zaleski, partner and head of tenant representation at Walter Hertz. Higher utility costs also translate into an increase in maintenance charges, which went up by about 20 up to 30% year on year. In the course of negotiations, landlords very rarely agree to the provisions limiting the maximum increase in maintenance charges. The costs are settled annually in the open book contracting. Companies can verify their amount, states Zaleski. He continues, now the standard in new buildings is 7 years contracts, not 5 years, which is dictated by the desire to spread the high costs of space adaptation over a longer period. It turns out that rising rental costs are not an obstacle for companies that still conclude contracts for large spaces. Naturally, some of the largest market players are also giving up some space because they have a problem with the attendance of employees who prefer to work remotely. These offices, however, are immediately consumed by smaller companies that rent space for a shorter period, but at even higher prices, often moving their headquarters to a better address. We can therefore speak of a decline in average lease periods in regional markets, points out Mateusz Zaleski. According to Walter Hertz, the vacancy rate in Warsaw decreased from the beginning of the year to 11.80%, in Krakow to 12.50%, in Wrocław to 70%, in the Tri-City to 12.30%, and in Łódź to 15.70%. Only in Katowice it increased to over 16% because a significant amount of space has been commissioned for use. GLL reports on different trends with the small and medium-sized customers, different from those reported by Walter Hertz. In Q2 2022, interest in flexible offices remained at a record high level. The average occupancy rate of the largest operators in the capital exceeded 75% and even 90% in central locations. Many small and medium-sized companies are opting for flexible solutions to wait out the lack of new supply in the market. This, in turn, along with the projected decline in the share of available space for rent, is a major barrier for new operators that are thinking of entering the market and restricts any plans existing operators have for expansion. As a result, we see a gradual increase in prices, which is further influenced by the current economic situation, comments Adam Lis, Flexible Office Solutions Manager at GLL. Concerning the residential asset class in Poland, in the second quarter of this year, a total of 9,200 new apartments were sold in the 6 largest markets, 11.7% less than in the previous quarter, and as much as 53% down on the same period in 2021. The drop in sales is mainly due to higher mortgage interest rates and tighter credit rating regulations. As shown in the GLL report, which summarizes the previous quarter, despite the reduced interest in purchasing flats in the market, housing prices continued to rise. The second quarter of 2022 has been significant has seen significant supply-related developments, which, in the opinion of GLL's experts, have had the effect of reducing the transparency of the relationship between demand, supply, and price evolution. In Q2 2022's new supply, in addition to the projects intended for sale, there were quite a number which had been previously kept back due to a reduction in demand. This investment appeared in the offer predominantly in the last days of June, so that the formal, in commas, entering the market could be conducted prior to July 1st, when a new Developers Act would come into force. It has already come into force. In reality, these particular properties have appeared on sale either at the end of the year or in the first half of next year, predicts Kazimierz Hirezik, Executive Director, Residential Advisory at GLL. As a result, the number of flats whose sales formally started in Q2 on 6 major markets was very high, over 19,000. However, in reality, only approximately 11,500 of them can be treated as actual new supply. GLL experts assess that the developers' behavior is a rational response to the market situation. They are trying to adjust the volume of new supply to the lower levels of sales. For market analysts and market participants, however, this strategy adopted by developers means that there are problems in assessing the scale of actual supply. As a result, there are currently 2 main types of flats for sale: actual, in commas, current, and those introduced formally, again in commas, but whose sales are deferred. The phenomenon of introducing investments formally for sale was a major feature in 3 agglomerations: Warsaw, the Tri-City, and Wrocław. Concerning the industrial asset class, trends in Poland, according to a report prepared by Newmark Polska, at the end of the second quarter of 2022, Poland's total warehouse and industrial stock amounted to over 26.1 million square meters, representing 90.5% increase on the same period in 2021. New supply in the first half of the year surpassed 2.4 million square meters, of which close to 53% was delivered in the first 3 months, marking the best quarterly result in the history of the Polish market. The warehouse sector in Poland remains in good shape after the first half of 2022. The market continues to see high tenant activity, 3.7 million square meters, which is an increase of 12% year over year, generated mainly by e-commerce, retail chains, and logistics companies. At the end of June this year, developers delivered another 1.8 million square meters, with the market still facing a shortage of vacant space. The high absorption rate is influencing decisions to start new investments. The result of 5.6 million square meters of projects currently under construction is the highest value recorded in the history of the entire sector. Axiimo summarizes the first half of the year in the warehouse market in the report Polish Warehouse Market in H1 2022. Fairly high construction and operation costs of warehouse and industrial facilities have gradually pushed rental rates up in most locations across Poland. It is estimated that rental growth has reached around 15 to 20% in the year to date and varied by location. At the end of the second quarter of 2022, the highest warehouse rents were those in Warsaw. These are our Polish news in September, and you're welcome to see the news about the other countries in the CSEE region when you visit proptech.eu. See you in our next episode. Bye. PropTech Bulgaria has very good news to share with you today. Following our latest calculations, our database with European PropTech companies reaches 4,140 companies. Our extended database reaches over 5,200 companies in Europe. You can have access to all these data and analytics based on such a large database. Only to mention that 4,140 companies equal to 91% of all PropTech companies existing in Europe, which originate in Europe. So, one way to have access to this information is through our annual report 2022 European PropTech Report, 30 countries in numbers. You can get information about the PropTech profile of each of these 30 countries and decide either how to expand your operations if you're a PropTech company, or where to look for a particular type of PropTechs if you are a property developer. Of course, you can also have a customer-tailored analysis on specific market niches. You can just imagine any niche you need information about, whether it is energy tech, invest and finance PropTechs, PropTechs for the retail asset class, for industrial asset class, AEC PropTechs for architects, construction engineers, and designers. PropTechs which classify as construction technology companies, contact companies, visualization PropTechs, PropTechs for real estate agencies. You can name really any type of PropTechs you want to have information about and the best players in Europe. Only contact us directly and see more information on our web platforms proptechbulgaria.eu or cproptech.eu. Talk soon.